Transparency is key. So I have made 800, 900K in crypto. Not incredibly a lot, but quite a bit for an average Joe. In the stock market, I've made 500K. You know, granted, I've been involved in a lot of crashes, and I do know when a good opportunity arises, and it's usually when everyone is freaking out. And what are people freaking out right now? They're freaking out about the economy. Quantitative easing, interest rates going up, housing, blah, 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 blah. People have less money, groceries are more expensive, gas, blah, blah, blah. So this video is if I was talking to myself just as a beginner getting into crypto and I only had $1,000, how would I allocate my positions? This is not financial advice. It's just if I was speaking to myself, if I was to start things over again. So without further ado, let's get started. Number one, 500 bucks. 50% of the portfolio is going into Bitcoin because that is your safe base. That is your digital gold. That is the thing that's going to hold its value. You might argue that, hey, it's down 70% right now. How is this a good store value? I will argue that, hey, it's on sale by 70% right now. This is truthfully $1 million coin. So wouldn't you rather want to have a piece of it at 20,000? Number two, 20% of the portfolio I would put into Ethereum. Why? Because it's the roadmap to all of cryptocurrency. It's kind of like the land. Everybody wants to build businesses. However, you need to have a place to build it, and Ethereum is that place. It's still relatively in its infancy when it comes to going from proof of work to proof of stake. I believe its risk versus reward is rather high. Its all-time high was close to 5,000. It's sitting at 1,000 right now, relatively, you know, give or take a few dollars, maybe 100-ish during the time of this video posting. So risk versus reward. That's why I would put $200 into Ethereum. This is a long-term HODL wallet, right? Hold, that's where the term HODL came from. It was misspelled. You're holding for long term. You want to take advantage of things. You're not looking for it to turn around tomorrow and be rich. We're looking at 3 to 5 to 20 years down the road, right? So number three would be ADA. I would put $100 into ADA. Right now the portfolio is at $800. And the reason I would invest in ADA is because, again, it's a project that is in its infancy and everyone needs a competitor. Apple needs Samsung to innovate, to keep them on their toes. You know, same thing, Microsoft would be considered in one of those. Toyota versus Ford, you name it. Everybody has a competitor in their sector. And Charles Hoskinson, the founder of ADA, was also the co-founder of Ethereum with Vitalik Buterin. So he didn't like how things were going. He decided to start his own project. Therefore, I think that it has a good chance for success. The next coin, the fourth coin that I want to talk about, we are looking at 850, putting $50 into CRO, the Crypto.com coin. Why? It's kind of a little bit more of a risky. That's why we're only going with $50. And because they've spent massive amounts, we're talking hundreds of millions, potentially billions of dollars in advertising, in F1 and NBA, all over the effing place. They've spent too much money to potentially fail. I believe that they're a big player that's here to stay, and their coin is cheap at the moment. You know, it's down again 70, 80%. So the next one is going to be XRP. This is going to be $50 as well. This will bring us up to $900 into our portfolio. And XRP, it might be the riskiest of all of them because they've got a court case going with the Securities and Exchange Commission saying that it's a security, and they're fighting saying that they aren't. But if they do win the case, we are looking at a 10x, maybe even a 50x bounce from their long term. So XRP is more of a governance token that is not super decentralized, but it has a good chance of kind of being a network for payment for major businesses like in banks like Chase, or how to swap money, right? That can be controlled. So therefore I have a feeling that it has a good chance for success. The next one, bringing us up to 950, would be Sand. Why? Because the metaverse, the Oculus Rift, you know, Square changing their name to Block, Facebook changing their name to Meta, they're moving towards this digital world, aka the metaverse, and people are going to start buying property. They already have been, but start real estate, so much more, NFTs, books, memorabilia, you name it, video games, swords, blah, blah, blah. It could be so much stuff. So therefore, I think sand is a good risk versus reward. And the last one on the list is going to be ApeCoin. Why? Because it's getting more into that NFT space. The apes are some of the most expensive NFTs around. We're talking minimum of $100,000 to purchase one. Some of them go for multi-millions of dollars. So you have to be a big player to own one of these suckers. And just for that reason alone, the nostalgia and the community that they're building, you know, it's like being a part of a special club, you know, like a gentleman's club, right? You might be on the very bottom by having some ApeCoin, but I do think that there is a good 10x, 50x, maybe even 100x in there for this coin. So that is my $1,000 portfolio if I was to start over as a beginner. These would be long-term holds that I wouldn't even think about selling till the next halving, you know, in 2024, holding much longer to potentially forever, and staking some of these guys to make basically dividends back on a return on your investment type deal as technology improves. So now I believe is a good time to be involved in the space, and therefore those are my recommendations if I was to start over, talking to myself. This is Johnny Crypto. I'm here to help you make some money.